Today, we're diving into something that could completely change how we interact with money: central bank digital currency, or CBDC. CBDC are set to be the central bank's new tool for controlling the economy, replacing the traditional methods like adjusting interest rate. But what does that mean to you? We are at the end of the line when it comes to how much power central banks have to control inflation through the interest rate. The Bank of Canada, like many others, is struggling to fight inflation, while the government continues to spend and immigration numbers remain pretty high. Raising interest rate isn't working anymore. People can afford higher rates, and household debts level are too high. So what's the solution? Enter CBDC. Here is how CBDC are going to change the game. Central banks will use CBDC to directly influence the economy instead of just adjusting interest rate. They can change the interest rate offered on CBDC balance. For example, if they want to control the economy, they will offer a higher interest rate on CBDC savings, encouraging people to save and take money out of circulation. If they want to stimulate the economy, they will lower the interest rate on CBDC, pushing people to spend more. This might sound a more efficient way to manage the economy, but here is the catch. It's a tool to get people hooked on a digital currencies, moving away from cash and traditional ownership models. CBDC will push us toward an economy where cash and physical assets matter less and access becomes the focus. You won't need to own a property or large assets. You will just trade your CBDC for experience or service. You may have heard the phrase, you will own nothing and be happy. That's the underlying idea behind the CBDC. It shifts the society away from the ownership and toward the model based on access. Access to service, shared resources, and a digital economy. In places like China, they already have this model. You don't own much, you just rent or borrow through the digital currency system. This shift will even affect the real estate market. If the CBDC offer higher interest rate than traditional bank accounts, people will move their money into CBDC rather than banks. This will raise mortgage rates, making home ownership even less attractive. With higher mortgage rates, fewer people will want to buy homes. Instead, they will find it easier to live in a shared economy where renting is the norm and the ownership becomes less common. But here is the bigger issue. Who controls the CBDC? It's not politician. This about central bank and private banker have controls over the economy and by extension your financial freedom. This could lead to a system where your behavior is monitored in real time and access to your money depends on your social credit score or compliance with the system. Sounds familiar? It's already happening in countries like China. Think about this. When you own your home, you have autonomy. The government can control your asset, but once everything is tied to a digital currency controlled by a central authority, that autonomy disappears. CBDC could be tied to a digital ID and social credit score, limiting your access to funds based on government policies or personal behaviors. This is more than just a shift in how we pay for things. It's a shift in how we think about ownership, freedom, and autonomy. If you are concerned about this future, the time to act is now, before the CBDC become fully integrated into our lives by 2025 or 2026. So, what do you think is the shift to CBDC inevitable? Will you reject it or embrace it? Let me know in the comments below. And if you found this video an eye-opening, don't forget to like, subscribe, and share it with somebody who needs to hear this.
Subscribe for more insights. Secure your wealth and financial future with Pyramide today.